Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics you wish to discuss, please chat those over. We'll go through those questions or topics sequentially. The topic that we wanted to bring and share today is Fidelity Solo 401k Review 2025. Why self-directed beats the basic plan every time. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So as mentioned, if you do have questions or topics, whether on this topic or either unrelated topics, please don't hesitate to chat those over. In the meantime, let's dive into today's topic, which again is why a self-directed solo 401k at Fidelity beats Fidelity's basic plan every time. So the problem with Fidelity's basic solo 401k plan is that it's a prototype plan that lacks certain key features. For example, based on experience and client feedback, the primary missing feature is the ability to make Mega Backdoor Roth contributions, which is how one can potentially contribute up to $70,000 or even more for 2025, where the funds end up either in a Roth solo 401k or a Roth IRA. It's up to you. So Fidelity's basic solo 401k plan does not support the Mega Backdoor Roth, among other features. And we'll go through those top features, which ultimately leads us to the conclusion that a self-directed solo 401k, where the accounts can still be at Fidelity, is going to beat the basic solo 401k plan every time. So let's introduce the self-directed solo 401k. So I think to understand what a self-directed solo 401k is, it's really important to understand that a 401k is a legal entity. It's a trust. So like any type of legal entity, it's the documents that create it. So, for example, when someone opens up a vanilla plan at Fidelity, a basic plan at Fidelity, that means that your account is at Fidelity and you're also using Fidelity's basic solo 401k plan document, which is going to be very vanilla. It's not going to allow for the Mega Backdoor Roth. It's not going to allow for a lot of the other features that we're going to go through. Whereas you can have a solo 401k plan provided by a third party, like my solo 401k Financial, that is a very robust plan that has all the features. It has the Mega Backdoor Roth, for example, but still have your account at Fidelity, because Fidelity will open up accounts for third-party plans. So a self-directed solo 401k means you have the plan documents through someone else, like my solo 401k, so custom drafted plan documents that are going to allow for greater flexibility, greater investment options, all the features that you want, but still have your accounts at Fidelity. So you could even upgrade an existing plan, a basic plan at Fidelity, to a self-directed plan to take advantage of the features, but still keep your investments in accounts at Fidelity. So that process is referred to as a restatement, where your basic plan at Fidelity continues, but the plan documents are cut out and replaced with our plan documents, so that now you can take advantage of all the features, whether it's the Mega Backdoor Roth or loans or the other features we'll go through here in a couple of slides. Now, part of that restatement process will entail opening up new accounts for the restated plan, for the upgraded plan, but those new accounts can be at Fidelity. So even if you have a vanilla plan at Fidelity, you can upgrade to our plan, open up new accounts at Fidelity, which we help our clients do, then transfer the cash and assets over from the pre-existing account for your basic solo 401k at Fidelity to the new accounts that are opened up for the third-party restated plan, for the full featured plan. So let's go through those missing features that are not available with the basic solo 401k plan at Fidelity, but that are available with a fully self-directed solo 401k plan like the one offered by my solo 401k Financial. So the number one missing feature, Mega Backdoor Roth solo 401k. So just to explain what that is quickly, it's a way for someone to be able to contribute a very high amount, relatively speaking, where the funds end up in a Roth account. Could be a Roth 401k or a Roth IRA. So in order to be able to make Mega Backdoor Roth Solo 401k contributions, you need to have a plan that supports, that allows for the Mega Backdoor Roth Solo 401k contributions. So specifically, you need to have a plan that allows for voluntary after-tax contributions and then a transfer of those after-tax funds either to a Roth Solo 401k or a Roth IRA. Now, it's going to make sense to work with a provider like my Solo 401k Financial that has deep experience in helping clients, right? We've helped thousands and thousands of clients make Mega Backdoor Roth Solo 401k contributions. So it's someone that can help guide you through those specific compliance steps, because it is a specific process that has to be followed. It's a two-step process. Number one, you make a voluntary after-tax contribution to a separate voluntary after-tax account. And then number two, you transfer the funds out of the after-tax account either to a Roth Solo 401k or Roth IRA. So even though that first step, when you make those voluntary after-tax contributions, that doesn't need to be reported on your personal tax return or your business tax return, doesn't need to be reported on your W-2. For example, if your business is taxed as an S Corp. But that second step, when you move the money from the after-tax account to either a Roth Solo 401k or a Roth IRA, that does need to be reported on a Form 1099-R. And we handle that Form 1099-R as an optional free service for our customers. In other words, no additional charge. Now, another top feature that's not available with the basic plan, but that is available with the fully self-directed Solo 401k, like the one offered by my Solo 401k Financial, is the ability to not just invest in traditional brokerage type investments like stocks, bonds, mutual funds. Of course, those are available with our plan, but our plan also allows for investing in alternative investments, true alternative investments, such as real estate, crypto, private equity, pre-IPO stocks. So you can have the documents provided by a third-party plan that are going to allow for those types of investments. You can still have your brokerage account at Fidelity, but you could transfer funds out to make alternative investments, or you could have a bank account as well as the brokerage account to facilitate those alternative investments. Next missing feature that's not available with Fidelity's basic plan is the ability to take a Solo 401k loan. So this is where you can literally withdraw money from your retirement account. You can use it for any purpose whatsoever, could be a personal purpose, and that withdrawal won't be subject to taxes or penalties as long as it's, number one, within the contribution limits and documented as a Solo 401k loan, and then finally paid back according to the loan terms. So the limits are that you can borrow up to 50% of the balance, not to exceed $50,000. It needs to be documented as a loan. We handle the loan documentation requirements as part of our service for no additional charge, and then paid back according to the loan terms. So those loan terms are going to require that it's paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. The tax credits. So Fidelity's basic plan is not going to allow the self-employed business to be able to claim $1,500 in Solo 401k tax credits, whereas our plan does. So in order to be eligible to claim the tax credits, you need to have a Solo 401k plan that provides for an automatic contribution feature. So our plan documents do this. So this would be available to not just new Solo 401k plans, but even plans that are upgraded, existing vanilla plans of Fidelity that are then restated to our plan documents. Now the plan will include the feature, the automatic contribution feature, so that tax credit is a $500 credit. So it's not a deduction, it's a tax credit. So it's a dollar for dollar reduction in your tax liability. And that's for 3 years for a total of $1,500. Now that automatic contribution feature will require establishing a default 3% contribution percentage, but the self-employed person, as the participant in the plan, has the right underneath that feature to opt out of the default. And the mere fact that they exercise their right to opt out of the default doesn't mean that they're not eligible to claim the credit. They still are, because all that's needed is for the business to have a plan that includes the automatic contribution feature, and it still exists, notwithstanding the fact that the participant, meaning the solo 401k owner, exercised their right to opt out of the default. So that credit is tremendous because it can more than offset our fees for the first 7 years. We charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. It's a totally flat fee. It's not dependent on the support that's needed. It's not dependent on the value of the plan assets. 5500 EZ support. So if the value of your solo 401k plan, including the value of any defined benefit plan that might be sponsored by the self-employed business or individual, if the total value exceeds $250,000, there's an informational filing requirement that must be done. The name of that form is referred to as Form 5500DZ. So we handle that 5500DZ as an optional free service. We handle it under the electronic filing system to make it easy for the client. Whereas with Fidelity's basic solo 401k plan, they're not going to file the 5500DZ for you. The individual would need to find someone else to handle that, which of course would include a fee. Whereas again, the 5500DZ support is included as an optional free service for our plan customers. In-plan Roth conversion and employer Roth. So this is just more ways to accumulate funds in your Roth Solo 401k account. So the first way would be to convert pre-tax money that's already in your Solo 401k plan, convert it from a pre-tax status to a Roth status. Now, of course, that's going to be taxable because it's going from a pre-tax status to a post-tax status. But then going forward, you have the potential for tax-free growth. It's also going to be reportable. So it needs to be reported on a Form 1099-R. And we handle that Form 1099-R as an optional free service for our customers. In other words, no additional charge. In addition, our plan will allow for employer contributions to be made as Roth contributions, whereas Fidelity's plan is not going to allow for either. Not going to allow for the in-plan Roth rollover, the conversion of funds. In other words, from the pre-tax account to the Roth account. It's not going to allow for employer contributions to be made as Roth contributions. Checkbook control. So with our plan, as we noted above, one of the top features is the ability to invest in alternative investments. And for that group of clients, a lot of times they want to have access to their funds quickly. So being able to have checkbook control over their funds can be instrumental in being able to take advantage of investment opportunities. So all that's needed is to have an account at a bank or a brokerage opened up under the name and EIN number of the plan. We're very hands-on in helping to open up those types of accounts. So it could be a bank account that has a checkbook feature. Could be a brokerage account that has a checkbook feature. So for example, the accounts that we're helping customers open up at Fidelity for their plan that's provided by us does come with a checkbook feature. So they can access their funds via that checkbook at Fidelity. Flexibility to open up accounts. So we've talked a lot about how you could have your account at Fidelity for the Solo 401k plan provided by us, but we are totally neutral as far as where that account is at. So it doesn't need to be a Fidelity. So you could have an account at Fidelity as well as an account at a bank or credit union, or you could even have accounts at different brokerages, whether it's Schwab or E-Trade, just to name a few. And then the last feature we want to highlight before we turn to the questions that were chatted up, we definitely appreciate you chatting up those questions. If there are questions on this topic or even other unrelated topics, please don't hesitate to chat those over. We appreciate the chance to go through your questions. Also, if you're finding this video to be helpful, if you could please like this video, it really helps to get the word out to other self-employed individuals just like you, other solopreneurs, other freelancers, or share it with others that might be interested in the topic. That would be greatly appreciated. Thank you so much. So the last feature is the ability to make different employer contribution amounts. So this feature is definitely a feature that's allowed, that's supported with our plan documents, and it's not supported with Fidelity's basic plan documents. So this would refer to scenario where there's multiple participants in the solo 401k. So for example, let's assume that there's two spouses that are both working in the same business, right? Both participating in the solo 401k. So with Fidelity's solo 401k, each spouse will need to make employer contributions in the same percentage, right? Let's say that each spouse receives W-2 wages from the self-employed business, taxed as an S corp, and each spouse is going to make employer contributions at a 10% level. Whereas with our solo 401k plan documents, each spouse could have different contribution percentages, right? One spouse may want to contribute the full 25% of their W-2 wages, and the other spouse might not want to make any employer contributions. So that type of customization needs to be supported by the plan documents. It certainly is supported by our plan documents. It's not supported by Fidelity's basic solo 401k plan documents. All right, wonderful. Well, again, thank you so much for checking out today's topic. Please like this video. We also invite you to subscribe to our channels, whether you're on LinkedIn or YouTube or X or YouTube, as we do go live every single day. And then you'll get notifications of when we go live, so you can see the topics that we want to share, or you can come and ask questions. So we appreciate the chance to engage with you. All right, let's take the first question. I had a question related to my day job. I have a 403B that I put $23,500 into in order to max it out. The hospital matches, and with years of service match $31,000 into a 401k. Is that $31,000 part of the $70,000 cap? In short, yes. So generally speaking, the only type of contribution that's aggregated is the employee contribution limit. So if someone has a 401k plan at a day job and they max out their employee contribution to their day job 401k, that means they're not going to be able to make any employee contributions to the solo 401k, because the employee limit applies at the employee level. But the employer contribution limit, the voluntary after-tax contribution limit, the overall limit applies at the plan level. So one's contributions that they make to their day job 401k plan does not reduce their ability to make other types of contributions to the solo 401k. That's the general rule. The exception to that rule is the 403B exception. So under the 403B exception, all the contributions that are made to the 403B, whether employee or employer, together with any contributions that the individual wants to make to the solo 401k, the sum of those contributions, the employee and the employer contributions made to the 403B, plus the solo 401k contributions, the sum cannot exceed the overall limit, which, as you noted, is $70,000 for 2025. Great question. Thank you so much for bringing it. Is there a deadline that I need to have a 401k plan in place for 2025? Wonderful question. So in order to preserve the ability to make all types of contributions for 2025, whether employee, employer, and or voluntary after tax, the individual would need to set up the plan by the end of the year. So if you want to preserve the ability to make all types of contributions by the business tax return deadline, including any timely filed extension next year. So it could be, for example, October 15th of next year if the business is taxed as a sole proprietorship and the individual files a timely extension for their 1040, to preserve the maximum amount of time and the ability to make all the contributions, whether employee, employer, or voluntary after tax. The individual would need to set up the plan by the end of the year. Now, setting up the plan just means signing up with us. It doesn't mean opening up the accounts. It doesn't mean obtaining the EIN number for the plan. The accounts can be opened, the EIN number can be obtained sometime next year in 2026. Again, as long as you sign up by the end of the year. Great questions. Yes, so as noted, you'd have to not only subtract the employee contributions made to the 403B, but also the employer contributions. And then what's left is what could be contributed to the solo 401k as long as you have that self-employment income to justify those solo 401k contributions. And those could either be made as employer contributions or voluntary after-tax contributions, assuming that you have a plan like ours that supports voluntary after-tax contributions. How long does it take to open a solo 401k plan with my solo 401k Financial? So we prepare the documents within the same business day when someone signs up. So if you're trying to lock in the ability to make all types of contributions for 2025 by the business tax return deadline, including extension next year, you would just need to sign up by the end of the year. Now, of course, it does get very busy at the end of the year, so it'd be prudent to give yourself at least a few days, but it could be done all the way up until December 31st. Great comment. You didn't mention purchase of physical precious metals. Yes, that is definitely something that's allowed. Just another example of the investment options that are available with the self-directed solo 401k plan, but they're not available with the basic solo 401k plan offered by Fidelity. Absolutely. We have our 1-800 number as well as our calendar, which is available at mysolo401k.net/book. If you book a call, then we can speak to you one-on-one. That's probably the best way to do it. Yes, if your business is taxed as a sole proprietorship, you can only make either employer or after tax. The employer contribution limit is going to be 25% of the self-employment compensation. But you're going to be limited to just that difference that you noted. You wouldn't be able to go up to 40 if you've made 54 or $54,000 was contributed to the 403B between employee and employer because of that 403B exception that we talked about. Thank you so much for the great participation. Please chat over any more questions or topics that you wish to discuss. We'll give it a moment to see if anything comes through. Is the Fidelity route a popular option when switching to self-directed? Yes, it's the most popular option for our clients in terms of where they want to open the brokerage account at. Fidelity and then Schwab would be number 2. All right, well, we also invite you to our community. We have the largest community of self-directed investors, solopreneurs, interested in the solo 401k topic. We have over 30,000 members. So that means there's a vibrant community. There's lots of forums. There's a library of videos and webinars. There's the industry's first AI, which you're also welcome to use at solo401k.ai. So there's a lot of great ways to learn, to share the knowledge. All right. Well, thank you again so much. Thanks for the great participation. Until next time, everyone, take care.